Yo, it's good, boys. Charlie here, back with another video. This video, we're gonna go over this trade I took last week on a Monday. I hit this trade for a 1 to 4, made 4% on this on a couple $100,000 accounts. So I'm gonna quickly go over the core understanding of my strategy, how my strategy works, some confluences I look for, some rules within my strategy. And then I will go over this trade as well. I know sometimes, I have new people that watch my videos, so I want to quickly go over the core understanding of my strategy in case, again, anyone new is watching this video. So let's quickly go over my strategy. To be honest with you guys, is pretty simple on the core understanding of it, right? So let's draw some stuff out real quick here. Let's say we have a bullish market, right? You guys know that bullish market trends like this, right? This is a bullish market, right? The core understanding of my strategy is we look for trending markets, okay? We want to make sure we're within trend, right? And we want to make sure price has a reason to continue trend, all of that stuff, right? If that stuff checks out, what we look for internally on a 5-minute chart, and I do this on a 30-minute as well. 30-minute time frames are a lot more slower. Mainly all of my trades are on the 5-minute chart, okay? What I look for from this, from when price is trending bullish like this, you want to see price come down and take out the last previous higher low. And what that's gonna do is that's gonna take out a large amount of liquidity, which is just stop losses within the market under a major low like that, right? You have people longing right here. You have people in long positions. You have people trailing their stop losses from, the whole way down here, putting it under each and every low, right? And when we have a most recent low, that is going to cause price to chase it, to sweep out that liquidity, to then generate orders within the market. And that's going to generate, again, taking out their stop losses, so then people can get into the market, and they're usually buying from a key area to the left, whether that's an order block demand, whatever you want to call it, right? We're just using demand zones. And when we get that buying pressure coming in from this area on this left, after taking out a major low like that and taking out liquidity and manipulating those people from that higher low above us, that is enough if we get our bullish buying pressure. And I'll quickly kind of show over our entry models and stuff like that. But if we get our bullish candle closure or a break of candle and stuff like that, showing that buying pressure is actually coming in from this area to the left, then we will long this position and aim to continue this trend up, right? Okay, so you'll see this play out over and over and over again, okay? And all this is it's a manipulation of this last lower or higher low, okay? And what we want to see within our strategy is we want to see price close above, not necessarily close above, but at least take that last high, okay? And this is going to show that, again, price is still continuously bullish, and this is also going to incentivize a lot of people to put their stop losses under here, right? This is the last major higher low. If we never took out this last high, right, and price was just right here and started coming down, our last higher low would be right down here. This would not be a valid higher low because it never took out its last high. Do you guys see what I'm saying there? So that's kind of a, some key understandings of my strategy. One more thing I want to go over real quick is markets, when you're trending up like this, it's called liquidity, supply and demand, right? It doesn't have to be something like this, okay? It doesn't have to be just a higher low followed by, a higher high, and then we take it, right? It can also be something like along the lines of this, okay? Price is bullish and we start consolidating, okay? Right? We start consolidating maybe, and then we take out, let's say, the last low, okay? It could be something like this. Let me move this up a little bit like that, okay? So it could be something like this because the core understanding of our strategy is liquidity, supply, and demand, right? We are still in a bullish market. There's still liquidity sitting under lows like this, we're still reacting from a demand zone to the left, and we get our entry candle and we still long that position. As long as anywhere in here we had the most recent high get taken out, whether it just wicked past it, whether it closed above it, does not matter, right? Because we know a consolidation level like this, we're going to have liquidity above it, we're going to have liquidity below it. So those are the two kind of variants. The main thing being is, as long as price is, trending, if you're taking buys, you're going to be looking for a bullish trending market. As long as price is bullish and we take out that most recent last high, and this liquidity, is sitting down here, and this, another important thing is this demand zone can't be tapped. When we get that, that is valid for our strategy. So that's kind of a core understanding. There's a lot more that goes into it, and other confluences that I don't put on for free on YouTube here yet. I'm working on a community that I'm loading all that stuff into. But for now, that's kind of a core understanding of my strategy, right? So I want to go over this trade that I took on Monday, and I will pop up proof somewhere along this video here that I took this trade. And this is pretty much exactly what I showed you guys, right? Now, there's other confluences I use for this trade as well, right? So as you guys can see, it looks bearish, right? It kind of looks bearish, and you're going to be thinking, why would you be taking buys here on the 5-minute time frame? Again, with other confluences that I use, I had confluences that price may actually continue bullish from this area. Another thing is, market just opened right here on Sunday, right? Market opened and absolutely dumped. Price is going to come back up to, fill in this imbalance. We also don't have a weekly top wick yet, so we're probably going to go put in a weekly top wick, right? So that, what I just showed you, paired with other couple confluences that I used, I saw that, hey, price is probably going to be bullish in this market right now. So on the 5-minute time frame, this is what we saw, right? We saw a 5-minute demand. How I mark that out is just that, that bearish candle before this bullish movement. We have that 5-minute demand. And what did I just show you guys with the path tool? Same exact thing. Was price literally just is, we have other confluences saying that we're bullish, right? Price internally, this past market structure right here, we are bullish, right? And we have our demand zone. And what do we have here? Lots and lots and lots and lots of consolidation, right? Lots of consolidation all throughout this. So what's resting under all of these lows? Liquidity, right? So what else do we need to validate our strategy? We need to break out that last high. What do we have? We have a breakout of that last high right here, right? This was the last major higher high. After we took that, that is when price came down, right? Now after price took that last high, we came down, swept out all of this liquidity. Is our demand zone tapped? No, it is not tapped, right? So when price taps into the zone, this is perfectly valid to enter this trade. Now, there is a couple different, specific entry candles I use. You can use a candle close. You can use a break of candle, which means this bullish candle right here, which is going to be the second candle after we tap the zone. After we break past that high of that candle, that is when we can enter. And another entry model is a flip. So say if price came down here, tapped into the zone really, really deep, and then we came the whole way back up and we flipped from a bearish candle with a bottom wick to a bullish candle, I will enter on that flip and put that stop loss under that wick. So that is essentially exactly what I did here. This is a break of candle entry, right? So as soon as price wicked past this previous candle, that first candle that tapped, as soon as it wicked past its high, that is when I entered that trade. I put that stop loss right under that wick. Now, where did I target? Well, I ran a massive back testing section across multiple years, showing that 1 to 4s, strict 1 to 4s, like almost in, no matter the scenario, it does make the most P&L wise, right? Rather than 1 to 2s. Now, obviously, the win rate isn't the same, right? 1 to 2s is going to have a much higher win rate. But 1 to 4s, made about triple the profits as 1 to 2s did yearly, on a yearly basis. It was like 2.5% or 2.5 times more. So I use that to my advantage. And I also know that, hey, not every trade is 1 to 4 quality, right? If I think we might just take this high and I'm not too confident on us being overall bullish, I might just, take a 1 to 2 here because I'm not too confident. In this trade specifically, I was very confident, and I was also very confident that we were going to go put in a top weekly wick right here, okay? So that 1 to 4 actually did end up lining up perfectly with that top weekly top wick there that we failed to put in on Sunday, and we instantly drove down. So I was targeting that top wick, ended up being a 1 to 4, you know, absolutely perfect. So that is where I got out at. And again, just to explain one more time, you know, we have an overall bias that price is going to be bullish, and internally, this is kind of the entry model right here. This is literally the core understanding of my strategy. We have a demand zone, all of this consolidation, right? You have liquidity resting all under these lows. Price comes up, takes out this last high. We sweep it, and we get a first candle. Another thing is a candle can't close within that demand zone. It makes it invalid, right? So we never close inside that zone with that first candle. That second candle came in, put in a slightly lower wick, right? And then we started to flip bullish with lots and lots and lots of momentum. And after we did that, I got in at a break of candle entry. And yeah, that's that. That's pretty much it for this video. I just quickly wanted to go over the core understanding of this strategy. It's very simple, right? But as far as other confluences goes for this strategy, you know, a lot more goes into it beyond just this. There is people in the space that are teaching this, right? And they're teaching this as a full-on strategy. I don't believe that at all, because this, what I just showed you, a demand zone followed by a level of liquidity, and you know, coming down, giving you entry, you know, entry candles, all that stuff. That's gonna get thrown at you almost every single day, because this strategy is traded on multiple pairs. That's gonna get thrown at you every single day. If you don't have other confluences and you don't use other narratives to, you know, give you a better understanding on where the market is going to, and you can be in line with that in the 5-minute time frame, then if you can't do that, and you fail to do that, and you're just using this entry model, you're going to take a lot of losses, just like any other strategy out there, right? Any other strategy can seem very simple. You know, there's people that trade breakout and retest, right? That seems like the most basic, simple thing, but they're using, you know, lots and lots of experience on top of that with other confluences. And again, you only get better at trading a strategy the longer you trade it, right? You know, you understand its weaknesses, you understand its advantages and stuff like that. So that's pretty much it for this video, guys. I just want to come on here, give you a quick understanding of my strategy, how I hit this 1 to 4 on Monday. This was the only trade I took, and then I took another position the day after as well. And then again, Wednesday, Thursday, Friday, this entry model was shown to you, but I personally skipped all 3 of them. All 3 of them did end up losing. And again, that's because some outside confluences that I use paired with this as well. But again, that's pretty much it for this one, boys. I appreciate you for watching. If you have any questions, just comment. But yeah, that's pretty much it, boys. I'll see you guys on the next one. Peace.